Cases of deemed supply. This article outlines specific situations where transactions are legally considered as deemed supplies for value-added tax (VAT) purposes under the UAE VAT law. These transactions may not follow the standard pattern of a commercial sale or traditional exchange, yet they are treated as taxable supplies. This ensures that VAT obligations apply, even if no payment occurs or no formal sale takes place. 1. When business assets are no longer treated as business assets. Explanation. This case applies when a taxable person acquires goods or services for business purposes and includes them within their business assets. Later, if those goods or services are removed from the business, for instance, used personally or given away without charge, this is treated as a deemed supply. Key points. VAT applies even though there is no consideration, payment or exchange for the transfer. The fact that these assets were originally purchased for business purposes and input tax was recovered triggers the VAT liability. Once the asset exits the business for non-business use, the transaction is treated as a supply subject to VAT. Objective. This rule ensures that VAT is appropriately applied when business assets, for which input tax was recovered, are taken out of the business scope without payment. 2. Transfer of business assets between the UAE and another implementing state. Explanation. When a taxable person transfers goods that are part of their business assets between their UAE business and their business in another implementing state, this transfer is treated as a deemed supply. This applies to both directions. Goods sent from the UAE to the other implementing state. Goods received from the other implementing state into the UAE. Exceptions. This type of movement is not considered a deemed supply if either of the following conditions apply. A. Temporary transfer under customs legislation. The goods are moved temporarily under a recognized customs procedure, example, temporary import-export. In this case, the movement does not trigger VAT. B. Part of a taxable supply. The transfer is already part of another taxable supply, meaning the goods are being sold in a transaction that is subject to VAT. Since VAT already applies to the sale, there is no need for a separate deemed supply treatment. Objective. This rule ensures VAT applies appropriately when business assets move across borders within the VAT system of implementing states, ensuring consistency and preventing gaps in tax treatment. 3. Use of goods or services for non-business purposes after recovering input tax. Explanation. When a taxable person purchases goods or services for business purposes and recovers input tax on that purchase, they are expected to use those items exclusively for business activities. However, if those goods or services are used, wholly or partially, for non-business purposes, for example, personal use, this triggers a deemed supply. Key points. VAT applies proportionally to the extent that the goods or services are diverted to non-business use. The deemed supply ensures that VAT benefits, input tax recovery, are only retained for items genuinely used within the taxable business. This prevents misuse of the VAT system where personal consumption could otherwise benefit from business tax deductions. Objective. This rule maintains the integrity of the VAT system by ensuring that VAT is charged when business assets are used for non-business purposes after input tax was recovered. 4. Goods and services held at the time of VAT deregistration. Explanation. When a taxable person applies for deregistration from VAT, example, ceasing business operations, any goods and services still owned by the taxable person at the time of deregistration are considered to be supplied at that moment. This is treated as a deemed supply, even though no sale actually occurs. Key points. VAT is calculated on the value of these remaining business assets. This ensures that VAT is properly accounted for on items that were part of the business but will now potentially be used privately or sold without VAT registration. This rule ensures the VAT system captures tax due on assets that have benefited from input tax recovery before deregistration. Objective: this ensures that VAT is correctly applied to any remaining business assets when the taxable person exits the VAT system, preventing any tax leakage. For more details, contact us.